Hey, welcome back to the HUBB channel. We are live again with another great show that we have for you today. So much going on in the market with tech stocks reporting earnings all week this week. We have crypto actually going up. We have just so much to discuss. Rob, get on in here. Tell me what is happening in the market, what you're seeing, and why this is important for everybody watching today really quickly, because we need your insight right now.
Hey, Brandon, how are you? Happy Friday to you. And I agree with you. There's a lot going on in the market that's extremely important. The main thing, I think, is this correlation between higher rates and the market going down, pullback in the rates and the market going up seems to have broken down. Rates have been pretty quiet today. They're up a little bit, but nothing too significant. A little bit of movement around, but considering the volatility we've had in rates lately, today's been a relatively quiet day, but as you can see, the market is still lower. So it seems like it doesn't care what the rates are right now, and it just wants to go lower. So the question becomes, where is that point? How far down do we go? We thought that 420 could act as a bit of support. It did right in this area here, but would also, based on the zigzag pattern, didn't feel like that was going to be the end of it. Felt like we're probably going down towards 410, which happens to be right where we are now. So the question becomes, can this level hold? You can see that there's a 5-wave target down there. For some reason, the Elliott Wave algorithm likes a price a little bit lower. It doesn't have to be in this wave 3. We could bounce first and then come down there, but it doesn't look like this is the end of it. And you have a 261.8% fib level down there. I don't show that often because it doesn't happen all that often, but it does happen. And you wonder if that could be a possibility now. When we look at the 10-day moving average, we've been oversold now for 3 days in a row. And I talk about how no security in any time frame gets very far away from the 10-day moving average. But you know, we can stay overbought, oversold for short periods of time, just not long periods of time. And I thought perhaps we might see a little bounce today into the weekend. So far, that hasn't materialized. You know, we still have a couple hours till the market closes. And as you know, Brandon, when we've done these live shows, what happens at 2 o'clock can often get reversed moving into the close. So that's what we'll wait and see how things play out moving into the close. But for now, another down day. I'm really interested in looking at the IWM. If you don't mind, Brandon, I'd like to show that chart real quick before we get to the Q&A. I think like we've had alerts for our alert subscribers over at EWO, at EWOtrader.com on the S&P. We had 2 put butterflies, and then we had a Q's butterfly. Obviously, all 3 of them worked because they were to the downside. But look at that little tick down. Did you see that? That was almost like I planned that animation. But I wish I could take more technical credit than that. But we looked here at 170. Wondered if that would hold. No. Tried again, just like 420 did on the SPY. Then we broke down. Now the really interesting thing here on the IWM, because I think this is going to be the next area to make some profit on the way down, is this 165 level. That was the lows back this time of year last year, September or October. We're breaking down below that in a significant way today. A little bit oversold, a little bit of a vertical move. But gosh, when you go back and look, there you go. What do you see there, Brandon?
Clear, so that's blank space, clear skies, I guess, below.
Yeah. It's a void. It's a vacuum, and that means there's nothing there. And who knows where the IWM could find support. And with all of this stuff, with all this going on, the VIX is just like, all right, yeah, we're slightly elevated here. We're a little above 20, but there's no panic. And historically, when you put in bottoms, even short-term bottoms, you get something like that, where you at least get some sort of a spike. And right now, we're just kind of crawling to the upside on the VIX. So it feels like the market wants to go lower regardless of what happens now. I think the only thing that could change the scenario that we have, considering we're going down with rates trying to at least hold, is the Fed coming out and saying, hey, we overdid it and we'll start cutting rates next year. and I don't see that happening. So I wish you had better news for people that are bullish, but that's what I see, Brandon. It doesn't look too pretty.
So looking at your charts here, and this is just the SPY chart that you still have on the screen, that bottom fib level that you never really show actually looks like it's in play to me with that chart setup that you have right now, that 384 level, 384.47, which would be really catastrophic for the IWM if the SPY trended towards that level. The IWM looks like it could really fall, making things a lot worse over there. But it is surprising that the VIX isn't spiking right now. Just like you said, well, I mean, you would think that either one of two things happen. People either expect this to be dropping the way it is, and they're okay with this little pullback because I think they've been expecting it for 2 years, or they're just putting their money elsewhere slowly without a lot of volume rushing anywhere. So I don't know what's happening here.
Yeah, a couple things. First of all, yeah, I agree with you on, you look at the 261.8% extension, and it happens to coincide with the March lows in the market. So you're right. That seems in play. It's not a stretch. Like oftentimes the 261.8% fib level is a kind of a stretch. Doesn't seem so here, as you noted with those lows in March there. And I do agree with you. If we move that far down on the SPY, who knows where the IWM could find a bottom. And then talking about the VIX, when we do the weekend update show over on the Evo channel here on YouTube, I've had many people trying to tell me on why the VIX is different and all these different factors that move into the VIX, and the VIX doesn't show the kind of fear it used to. And, it just, when the general thesis comes out of it's different this time, I always tend to go back to it's never different this time. And I still feel like, yeah, maybe there's some differences in the VIX. I certainly don't trade the VIX like I used to when it was on the OEX, and it was a pretty good trade. But I still watch it, and I still think it's an indicator of a spike in volatility, and that's when fear comes in. And as you said, it's not there right now, which means that it feels like there's lower to go. And gosh, it just it could get a little ugly here now with the way things are setting up.
You mentioned the phrase "this time's different." That's funny because we've been talking about that a lot in our crypto circles and things like that, because a lot of the people that are out there talking with this big run up that we've had in Bitcoin, Ethereum, and that other stuff, and then everybody's like, "This time's different. This time's different." But really, as well as I do, it's never really different. History may not repeat itself in the market, but it often rhymes, given a lot of the stuff going on. So always be cautious when everybody's out there saying this time's different, because guess what? It's probably not going to be different. Something's going to happen. So very interesting.
Yeah, and I like that phrase too. It may not be different, but it rhymes. That's pretty good. I like that. And you are a big crypto guy, as we know, and yeah, that's been a pretty impressive move. And I've caught a lot of flack over on the Evo channel, people saying I'm a perma bull and not paying attention to what the charts are showing, and Bitcoin's going all this kind of stuff, and there it goes to the upside. So yeah,
I mean, the only thing the chart could be showing is slightly overbought, but I think that's based on a lot of the rumors going around. I don't see how you could short Bitcoin right now. Last week, almost $200 million in shorts got liquidated in Bitcoin alone. I mean, we're talking extraordinary short covering, which is absurd. I don't know how you could short Bitcoin with what is happening in the macro play on that stuff. Anyway, we'll get off that a little bit. We do have a couple of questions from our viewers here, because obviously we want this. If you guys have any questions, we'll hit a couple of these before we wrap this up, because Rob knows what he's talking about. Let's hit up Manuel first. RUM, looking at $5 support. What do you think about that?
Looking at what support?
It's RUM, R-U-M.
Oh, R-U-M.
He said, okay. Yeah, it looks like it might be getting support around $5. I think that's what he's saying. Maybe check that chart out here.
Yeah, and these are important levels when you look at it, and you can see over here we had the $10 level. For those that may not be aware, the two big levels for institutions are 5 and 10. And the reason for that is securities laws for institutions, mutual funds, etc. If their investment objective is registered as growth, then they can own stocks at $10 and above. They have to be registered as aggressive growth to own stocks that are single digits below 10. And so then the next level becomes 5. And if you can't hold 5, then you start to get into concerns and regulations of when they might have to move to the pink sheets, etc. And so 5 is like the last bastion. That's where it has to hold for even the most aggressively registered mutual funds institutions. So it's going to try to hold there. And, you know, if somebody was looking for, and, you know, we all know that you trade options, which is what we talk about a lot. You don't do that with money you can't afford to lose. But if you're looking for something really speculative, which would be, you know, really extra money laying around, you could try to take some sort of a shot at Rumble here and see if we can get a bit of a bounce off of 5. There is some institutional ownership here, and if it tries, you can see a perfect example of what I'm talking about is when it tried to break below 5, they came right in and supported it. I bet if we put volume on there, you'll see, yep, there you go. You'll see that, yeah, there was some volume in the selling, but there was also some volume well above average that came in on the buying, and that's what happens, because the reason for that is institutions will be forced to sell, even the aggressive objective institutions, if we trade for below 5. I forget the period of time. I used to know, and I think the regulations have changed a couple times, but if we trade below 5 for a certain period of time, they are then forced to sell, which means they are forced to realize the loss, and they don't want to do that. And that's why when you see it break 5, they tend to come in and support it. So at this point, if you had some really speculative money laying around and you just wanted to take a shot at something with this base that it's building, and the viewer is correct, there's a base building there at 5, perhaps you could even see some sort of a tradable bounce, maybe up to 7. And then watch if we break below 5, see what happens, because if we stay below 5 too long, then all of a sudden you might see that wave 5 target down here around 2 or 3 as even the most aggressive institutions give up. But yeah, you could take a shot here, a speculative shot, but watch that 5 level.
That was a good chart, good read. Also important notes around those $5 levels. That's a big level, just like you were saying, Rob. So thanks for covering that. Let's get off this this next comment here from Highlights. Wants to look at TLT. Look at the daily and the weekly chart on that one.
Okay, and so this is the inverse of TBT, which I look at. So TLT is the pricing, and then TBT is the yields. And so you can see that pricing's going down because the yields are going up. Now it does, and this this question kind of ties right into what I was saying in the beginning, where it feels like this correlation between the two has waned, because you can see the bonds are kind of stabilizing here. The 20-year is a good one to look at. We look at the 10 a lot. We talk about 30 because that's what mortgages are based off of, but 20 gives you kind of a good broad view of the market in general. So I like the idea of looking at TLT, and it has stabilized, but the market is not. And so that's a perfect example of what I've been talking about. So when you look at the daily chart, it is trying to hold here around 85. You can see it's in a qualified 5-wave to the downside pattern, which means at some point we're going to get a bounce in prices and maybe a little bit of a break in yields. That could give us potentially some sort of a move to the upside in the equities markets. But we're still in a wave 3, and you don't know when that bounce is going to occur. Don't get confused by this 4 saying that we're ready to bounce in a 4. These are projections that the algorithm gives you, and it means that if we bounce from here, that's the area where you could find some resistance on the wave 4 bounce. But it is not forecasting that the wave 3 is done. However, we are trying to stabilize here around 85 on the TLT, and we'll watch and see over the next couple of days whether or not we can hold that area, maybe try to mount some sort of a bounce. And then to switch over to the weekly chart, as requested, you can see that we are moving in a wave 5, which also, just like the daily chart, is forecasting potentially a move lower. That kind of coincides. We look at the TNX a lot, which shows that even though we're trying to hold around 5% there, that 5.3 to 5.5 maybe where we end up on the 10-year. So I think the bond market is kind of coming together here and matching as far as where the forecasts are. The issue is the equities market isn't paying attention anymore. And so the equities market seems to be thinking, yeah, well, we might be holding here, but it's still going to get bad. So it feels like the equities market is not in direct correlation anymore. It's forecasting it's still going to get worse. So prices are going to go down, rates are going to go up further, but we'll see if we mount any sort of a short-term bounce. But yeah, when you switch to that weekly chart, it looks less likely for a bounce on the TLT daily before we go down and hit that 5 target down here around 78 or so. And gosh, that's only 86. And that, we're starting to talk about, you kind of hinted at it, Brandon, Armageddon type scenarios here if we can't hold in this area. So,
yeah, I don't know.
Not a lot of pleasantries here going into the weekend, are there?
Yeah, I just don't know if it's worth playing that bounce right there. It might be a little bit too risky on our side. And it depends on your just kind of like you mentioned, what your time frame is for that option trade, I guess. So interesting play, interesting chart. Thanks for that one. Whoever gave it to us. I think it was highlights. Next question that we have here is from Will. We're looking at EWH. EWH. Will thinks it's looking pretty ugly.
We haven't looked at Hong Kong in quite some time. It used to be in the regular rotation on the weekly update, but I could spend the next 20 minutes drawing all these zigzags. So if you've watched it before, like there's one, and then there's another one, there's another one, and another one. So we are literally zigging and zagging to the downside here on the Hong Kong market. Now, the only positive that you could come up with here is that we're pretty extended. We're at 173%. So we've passed 161.8. But what have we been talking about here, Brandon, is could we go down to 261.8 on other markets? So why couldn't Hong Kong go down to 261.8? So that doesn't mean that that this is done. Perfect 50% wave 4 correction, and then just all these zigzags to the downside. Let's at least just look at the most recent one here, which all these are such complex moves, and that's showing a target which seems pretty doable down to 16. So I know that the moves look bigger, but when you come over to the scaling, each one of those big blocks is only $1. So if we're looking at 1681 now, it's only 81 cents. But then when you look at where it is, still a pretty decent move. It feels like that's in the cards, and then we'll have to wait and see where it goes from there, because we start getting down there, we're going to be over 200% on the wave 5 extension. So good call, Will. I think we see 16, and then we'll have to reevaluate. And there's the possibility that that zigzag goes down to 161.8, and you'd almost wonder if we go down that far, if that wave 5 doesn't relabel to a 3, which would be even worse. We had a little bit of a bounce here. You can see off the 61.8% extension, so it came down and touched that, but hasn't been able to break above 17, and it feels like 16 is the price that we're headed to there. And just looking across the board here, just not a good day in any market.
Yeah, I mean, I think that was all good coverage on all that stuff, Rob. Overall, the market, I think we're at a place where we don't know what's going to happen next. Just if you were going to leave us with some closing thoughts here, Rob, before we wrap up today's show, what is your biggest anticipation coming up here in the next couple of weeks? What do you think the market's going to be doing in general? I mean, given those charts that you showed us, I think I have a suspicion on what I think is going to happen to the market. Where are you at on this thing?
Well, we are getting a little vertical on the move down in the SPY, so I do feel like we need some sort of an oversold bounce at some point, and that could be very short-lived, may just be one day. We are not in a bear market yet. We've corrected over 10%, but we haven't corrected 15% yet, and a bear market's 20%. So I just feel like if you listen to the Fed, and we kind of chatted about this last night in the insiders meeting for our EWO subscribers, that if you listen to the rhetoric, they seem bound and determined. Now their PCE deflator came out, and the headline number was in line, but then you looked at the core number, and it was hotter than expected, up as high as it's been for 4 months. I think that's probably what's playing into the market going lower. So I feel like if the Fed is to be believed, they don't often act on what they say. Sometimes they jawbone and do other things behind the scenes. But if they're to be believed that they are committed to 2%, things have to get worse. And their own comments are they are willing to accept a little more pain in the economy and a little more pain in the markets to reach that objective. And so I feel like you have to take them at their word. Hard to find something too much to be bullish about, other than your area of expertise there, Brandon, with the cryptos. That seems to be the place to be right now, and that's where we are. And until things change, I think there's more downside to come, and any sort of bounces, I think, are opportunities to add to short positions for now.
I couldn't agree more with what you just said. I think that's the same way that I'm looking at this right now. I see some short-term bounces looking at the market here, and I see potential opportunities to add short positions, especially in any of the bigger indexes and things like that. It might be an easier play. So, Rob, as always, we appreciate you coming to the Hub channel here. We appreciate your insight on the market, and we appreciate everything that you're doing for us over here. And just those chart reads were really good. If you guys want to catch Rob over on the EWO channel later for his total market update, go ahead and go over there and subscribe over there, and go ahead and follow that channel. And if you're not subscribed here at the Hub channel, we'd like you to do so, obviously, and catch Rob every single week while he does this update, along with some of the other guests that we have here on the channel. Thank you all for coming, and we will see you in the next one.
Thanks, Brandon. Appreciate it. Great conversation as always. Have a great weekend, everybody.
Yep. Yeah.